Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Tesla report for Wednesday, February 15th, 2023. Before we look at the charts, please click like if you would each and every time you watch the daily Tesla report. Subscribe to the Wicked Stocks YouTube channel. You'll be notified each and every time the daily Tesla report or daily Apple report have been uploaded. Share content, if you would, with friends and colleagues. I really appreciate it. And you might take a look at wickedstocks.com, where we do the daily SPY, the daily Triple Q analysis. It's a subscription-based service. Today, we put out a decent stock pick on Applied Materials. We do two of them a week. Last week was Google and Microsoft. We've got a lot going on in the subscribed area, and you'll probably appreciate it if you appreciate the Tesla and Apple analysis on a day-to-day basis. So there is that. Here is a longer term chart, weekly bar chart. The first couple I'm going to show are weekly bar charts. Just a reminder, I like to start big picture and work my way into the day. But the big picture, we came off this channel support about a month and a half ago, early January, almost 2 months now, 83.54 to 95.24. The channel top at 252.77 is considered a 2 to 3 month target following the subsequent settlement about a month ago, 3 weeks ago or so, above what is a band of channel support in the 153.15 to 161.26 region. So the 2 to 3 month trend dynamic is constructive above 153.15, anticipating 252.77, both moving on a linear basis. I've been saying the 230s, 240s as a 2 to 3 month target. That 252.77 drops into the 240s in March. By April, it's in the 230s, so forth and so on. And we may reach it sooner than later, and I'll get to that in just a minute. But just bottom line, we are bullish into March, into the second quarter, above the 153.15 to 161.26 region, anticipating 252.77 as a Met objective. And that is going to be a significant test for Tesla long term. For those of you who are looking at buying Tesla through the rest of the year, for instance, as an example, it would be, in my opinion, above 252.77. You want to wait for that settlement above it, despite the fact that it would be an appreciable rally from here. And you could get long now. Just know that it is 252.77. It's going to be a significant test that just might contain buying into later years. So there's that. Now let's jump to, I'm going to show the 2 to 3 week outlook here. And you're probably familiar with this chart if you've been watching for the last few days. We have trend-defining near-term support projected off that January low that today we've got a red arrow covering it, but it's actually 189.44 to 189.65. We didn't test it on Monday or Tuesday. We didn't come off far off that mark, and we rallied significantly on Tuesday, obviously. We even closed at 209.25 roughly above that zone of Fibonacci resistance I've been mentioning. So, 4 or 5 days ago, we pushed through the 208.24 level, which is a 50% retracement from the August 22 high, the last August high against the more recent January low. We pushed through it about 3 or 4 days ago, did not close above it. On Tuesday, we happened to settle above it by a hair. So I'm going to still call it a session containment level, as you can see. I would like to see an unchanged open or higher, and we could then perhaps form a daily low at 208.24. 214 even is, by the way, the recent high from a few days ago. I don't see it as significant, but what I do think is that if we push through 214 even, we could test 221.25 intraday. 221.25 is a more meaningful Fibonacci resistance area. It is based on the all-time high from November of 21 against the more recent January low. It is a 3/8 upside. It should be respected for its ability to contain weekly buying pressures. If your time horizon is 2 to 3 weeks out, and I can show that again here, 221.25 is your profit-taking area if you happen to have gone long in the last couple of days. It is also a short sale area if you are savvy with that, whatever that means to you. It could mean if your time horizon is 1 to 2 weeks, you sell 221.25, you buy back in the upper 180s, this rising support area. If we close above 221.25, just know that it's expected. I don't know when, but I do think it is inevitable in the coming, a couple of weeks, and maybe a couple of days because of the 252.87 longer term objective. So closing above 221.25 is considered an eventuality. I don't think today but possibly by the end of the week. And if so, we're a mere 2 to 3 weeks away from reaching that 252.87 objective, where once again we can top out through March, even through the second quarter, perhaps into later year, and from there fall off again. It would be a significant longer term buy signal were we to close above 252.87 in the coming weeks. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Let's take a look at the downside today again. Because we could fall off. If we happen to open back below 208.24, that Fibonacci level, we closed just above it once again. 210.25, by the way, is this short-term channel bottom here. I think I have a better image of it right here, perhaps. 210.25. I opted to call this a mere minor point because we actually did close above that formation on Tuesday, and we closed above the more meaningful, in my opinion, 208.24 Fibonacci. So 208.24 is our pivot point for the day. How should I put this? I was going to call 208.24 an intraday level, a soft intraday pivot point because of the heightened volatility, and then just sort of ignore 214 even, that 208.24. And this is an ideal you may actually go with. 208.24 is a mere intraday pivot point, above which 221.25 in reach, below which we could cascade back into the upper 180s today. Possibly. Now, on the way down today, all the minor points, once again, are all carefully chosen. They're all tradable levels for aggressive day traders who like to scalp 2 to 4 points out of the day back and forth. 196.18 is the most notable of the downside levels, likely to contain intraday selling, possibly through the balance of the day. If we break 196.18, then I think you should expect this 189 handle support. Combination rising 1/3 speed line and channel bottom 189.44 to 189.65. If given the opportunity, a decent area to buy in anticipation of 221.25, possibly and probably by the end of next week. So, if we test 189.44, 189.65, this area today, it can contain selling into next week. And once tested, we could within 3 to 5 days test 221.25. Now, 189.65 is backed up today by a 186.78, which is a long-term speed line on the daily chart. It actually is shown here. You're probably familiar with this if you've been following the daily Tesla report now for the last few weeks. We closed above this speed line about a week and a half ago, and that was by one measure a meaningful buy signal, as I've been saying, and it actually comes together nicely with that rising speed line. So that's why I have 189.65 is backed up by 186.78, and this is a decent area to buy into in anticipation of 221.25. I'll say by the end of next week, and 252.87, this 2 to 3 month target, is actually in reach over the next 3 to 5 weeks, holding above the 186.78 to 189.65 area. So once again, if we dip into the upper 180s, that could be a buy opportunity for 252.87. And what does that mean? It could mean buying 250 out of the money calls that don't expire for at least 3 months. That is one example. Or it could just be going long the stock itself and holding it into the 230s, 240s, 250s, wherever this channel top is at the time. Now, if we do close today below 186.78, that does pivot the market south through the rest of the week and into next. And I would then anticipate this rising speed line at 145.80. And I emphasize rising because it's rising at a decent pace. And over the next 4 or 5 trading days, will actually converge with, once again, this long-term channel support that I mentioned at the top of the video. That is a base of longer-term support, and above which I'll go back to this chart here. The 252.77 formation remains a 2 to 3 month target. And we're 3 or 4 weeks into that now, and we're at least halfway there. And once again, if we were to close in the coming days above 221 and a quarter, we're just 2 to 3 weeks away from 252.87. So we are bullish above 189.65 through the rest of February. 221 and a quarter is likely over the next week or two, possibly over the next day or two above 208.24, closing above 221 and a quarter. No good reason to be short really through the rest of February, because the following 2 to 3 weeks are likely to reach this 252.87 objective. And if we close below 186.78, that tips the market south back into this zone of support on the weekly chart. And on the daily chart, it's here between 153.49 and 161.89. And as it turns out, this rising speed line, which you'll be watching daily, will be converging with this area over the next week of trade. So if we close today below 186.78, this could all line up perfectly as a solid buy zone as we move through March and into the second quarter, because we do remain bullish once again above the 150s, 160s as we move into later Q2. I think I'm going to leave it at that. Please click like, go to wickedstocks.com, check out our work. I will talk to you soon. We'll be back tomorrow, of course, with Thursday's Tesla report. Have a great evening.